Good morning, everyone, and welcome to the European crossover webinar. And we have some data coming out. Spanish, actually, German unemployment numbers should be coming out. Actually, no, what? They do not come out for another 55 minutes. It's actually Spanish Harmony, a flash number that just got released, down 1%. They're looking for a down -0.6. We do have German employment numbers coming out. They'll come out at 55 minutes after the hour. And then later on after that, because until we got that daylight savings time, usually we'll get the UK data 30 minutes after the hour. We haven't rolled over our time change yet here in the States. So UK data is going to be in another hour and a half. Consumer credit, and then at 6 a.m. Eastern, we will have Eurozone business climate, economic sentiment, industrial sentiment. Consumer confidence will be also, at 6 a.m. Eastern. And as we roll into the States, we are going to have advanced GDP at 8:30 Eastern. Let's see, with the usual weekly jobless claims, and then at 8:45 Eastern. Oh, that's right. We do have ECB today. Wow. Didn't even realize that so much stuff has been happening before. At 9 a.m. Eastern, we'll have preliminary German CPI. It usually comes in an hour earlier, but because with the time change, we have this variance. Canadian building permits at 9:30 Eastern, and pending home sales at 10 a.m. Eastern. So quite a bit of data this morning or for today. Take a look where we sit here on the euro. Still a bit on the weak side here. We did make it down there to that 1732. We even took it out, which was our bias chart support, and then we closed above it slightly, but we're a bit on the weakening side here on the euro. Take a look at the cable. Tad bit firmer, and then the Aussie. We'll leave it at that after that. Aussie, we did see a pretty good sell-off yesterday with U.S. equities, and we've only improved a slight bit. With that, we're going to move into the indices. You can see your NASDAQ. Boy, did we sell off, and we sold off really hard. There was that 11,355 we revisited. I thought we'd find some support here at the 11,176. See that right here. But even then, we overshot that. Well, actually, we kind of held around that area, and then at the close, we overshot it. And then we've kind of been working a little bit higher back on since the Asian session, which you can see we just kept it with one steady move higher. And we're coming back. We're actually currently right now at 2-day VWAP on the NASDAQ. You can see where we are on the S&Ps, just above 2-day VWAP. But once again, got to take all this with a grain of salt. You see a big sell-off like that, you're going to see a reaction. So there is some right there, just above the 11,300. And just a quick look at gold. It was weaker, obviously, with the sell-off we saw in equities, and that's about it. So let's go on and move into the news. Australian New Zealand dollar steady after slide. Global gloom adds to the easing case. The Australian New Zealand dollars were picking up the pieces on Thursday after taking a beating overnight when coronavirus shutdowns in France and Germany spooked investors out of growth-sensitive assets. Yeah, when these European, we were on the air when I was like, wow, I think it was the IBEX was a 9-month low, and the FTSE was a 5-month low. We were on the air when I heard that on the squawk in my ear. And boy, it really translated into the U.S. sessions as things really came apart. The Kiwi dollar stayed at 66.52, falling from 1.1% overnight from a top of 67.20. Both currencies have been sideswiped by a classic rush for safety after surging COVID cases threatened hopes for a global recovery. While New Zealand and Australia have been relatively successful with the virus at home, they both rely heavily on commodity exports leveraged to global activity. The risk is that the odd falls below 70 in recent incoming days. Bonds drew some heavy support or haven support from the angst from the 3-year futures. Um, and the renewed threat to growth only adds to the further easing from the RBA. Investors trim bets on Asia FX ahead of the U.S. election. Investors scaled back positions in several emerging Asian currencies. U.S. dollar considered a safe haven asset during times of uncertainty, and recent sessions as escalating coronavirus cases, particularly in Europe, stoked fresh lockdowns that would become hamper the global economic rebound. And let's see here, and these are just the Asian currencies: won, South Korea won, Singapore dollar, Indonesian rupee, Taiwan dollar. So let's get rid of that. And the dollar holds ground as rising COVID cases boost safe haven demand. The dollar held against a basket of currencies on Thursday as escalating coronavirus cases in Europe stoked investors' fear about fresh lockdowns. The vibe is similar to what it was like in late February to early March, said Rakia Talik, senior strategist, Okusan Online Securities. Back then, there was a swift or a shift to dollar buying to prevent risk in case of an emergency, leading to a higher dollar. The euro changed hands at 17.53 after sliding to a one-week low of 17.18. Remember, our bias chart support was 17.32. Amid surging cases, European Central Bank is meeting its expected to resist pressure on Thursday and unveil new stimulus measures, but will likely pave the way for action in December. Euro can fall further if Lagarde lays the groundwork for further policy easing at her post-meeting conference. Former Vice President Joe Biden's consistently leading in the polls over President Trump. Traders are cautiously betting on his victory in a plausible blue wave. While Biden is taking the lead, Trump has been catching up in some parts of the states. Let's see here. There's certainly a possibility of higher volatility in the market if it becomes a closer battle involving such risk as full results are not being released on the election day. Data due on Thursday includes U.S. third quarter GDP. Analysts expect to record record growth, but not enough to make up for the pandemic impact. The greenback against the Japanese yen was at 104.45. Bank of Japan on Thursday kept its monetary policy steady while signaling that it has delivered enough stimulus for now in the quarterly report. So with that, we're going to move into the analysis. I'm going to bear with me. Randy says, can you look at gold? Well, gold isn't even a market that I've been paying much attention to. Pop it up, but you can see I haven't even updated anything in a while. It drifted lower because of the move that we saw in equities. So we're holding this 1875. I don't, be honest with you, I'm not seeing anything of any real big thing in gold. You can see here, we're looking on a 2-hour chart, and you can see here we've been trading in this zone from 1875 to essentially 1925. Now we've just broken down here to the lower part of the zone. Although I will say that you can probably expect, once again with the election, you could see some big volatility. This was always the target they were looking for, which is down to 1827 to 1844. But the only way it looks like we make it down there is if we see equities take another leg lower. And that probably, a huge leg lower, but that would probably be as if all of a sudden the election tightened up. And it doesn't appear to be tightening up at all. In many of the battleground states, I know Trump is making a catch up, and, as I said before, we'll see what happens. But if for some reason Biden were to win Texas, that's it. It's game over. There's impossible for Trump to win. So it is leaning Republican. But if and Texas has done uh, something like close to 70% of it's all of its voting already done from 2016 in the early voting, which continues through I believe it's Friday. I believe it might be the last day, I think. And then, of course, the election is on Tuesday. So if for some reason you see, because we could have those results early, because once again, there is going to be all those totals will be tabbed up because we've been doing so much early voting here in Texas, and it's been record numbers. So if Texas goes Biden, you can forget it. It's game over. You don't even have to watch the rest of the other states. It's game over. There's no path if Trump were to lose Texas. So that's how important and key it is. Although they haven't been doing any real political appearances here in Texas. But once again, like I said, if Texas does flip, it's game over. You'll see an immediate rise at that point because there's no way for him to come back at that point. So anyway, enough of that. Let's go on moving to the analysis. And just opening up the bias chart, so bear with me. Yeah, Didier was saying, if Texas were moved to Biden, do you see a brighter sky for indices and stocks? Yeah, that's the key thing is that if it look, Biden's winning, and once again, I don't know if y'all are in the States, I don't think y'all are. Um, but like I said, I follow national politics very, very closely, and but I really don't care about local politics or anything. And I follow presidential elections very closely. So I do have a real good historical background on that. It just was something I used to like to do, going to do. Look, it looks like Biden's going to win in a landslide. That's what it looks like, unless something changes. That's what it looks like. He'll win in a landslide. But the thing is, and I guess people got burned from in 2016, but I was watching the thing last night and they're saying, hey, the national polls didn't get it wrong. uh, Hillary still won the national vote. The difference was it was the internal state polls, the ones that got the move wrong internally in the last week. That's what happened. So, but people have been burned by that. Is that no one? Everybody's being very, very careful. And of course, with the coronavirus spikes in Europe, that really gave an excuse then for the indices to really sell off, and they did. But yeah, if we see that big blue wave, the thing is that at that point, the thought is now Biden's going to go big. Biden's going to go like an FDR New Deal type thing. So 2.2 trillion, you could just pencil that in for sure. It might even go even beyond 2.2 trillion. So, like I said, you would really see a big reaction with stocks, and then subsequently, I would think the dollar would sell off. Euro dipped below the daily support level of 1732, but marginally recovered from those lows. Support on Thursday will be, I'll put here, it's set up as 1770, but it should have been right here at 1724. I don't know. I didn't pop in the thing. I don't know. I seen, go back to this. Hold on. And 1780's resistance. So, right. I was trying to get as many touches right here. And I think it was, yeah, 1707. That's where the 7 came out. 1707 is going to be the support. And 1780. Right now, um, The euro makes up 56.8% of the dollar index. So that's why the dollar index is kind of holding its own here. But I think right now this is more about the euro and the concerns of coronavirus cases in Europe that's actually working as a drag here. So just a word of thought there. Um, yeah, they're saying they didn't see the bias chart, but the bias chart is there here. So let me go on and move into cable now. So cable challenge 29 even, didn't quite get there, but it came pretty close. Challenge the 29 even area, but recovered to finish the session closer to 130 because it closed at 29.80. Uh, resistance will be 30.46 with support at 29.36. There, yeah, just making sure I have those numbers right. Then the Aussie dollar. So the Aussie posted a sell-off as equities fell. Support for Thursday will be 70.29 with resistance at 70.84. So real tight session. And onto the Kiwi. So the Kiwi closed lower, taking out the prior five closes. Support on Thursday will be 66.17 with resistance at 66.83. So same thing, keeping this one pretty tight. Onto the CAD. So the dollar CAD extended gains to the level of 33.34. You can see that there. Immediate resistance will be 33.49. We supported 32.40. And on to the peso. Dollar peso woke up on Wednesday as U.S. equities faltered. Resistance on Thursday will be 21.33 with support at 22.11. That's frustrating. I don't know why that didn't say it there. It should be 21.11. Oh, I see. Okay. Thank you very much. Um, thanks, MRBH. Thanks a lot. Yeah, he was saying, hey, you're showing the wrong screen. No wonder people were saying they couldn't see the bias chart support because I thought I was on that screen. I went back there to check on the gold, so I didn't switch it. So sorry about that. Let's go and move to the peso. As I mentioned, dollar peso woke up on Wednesday as U.S. equities faltered. Resistance on Thursday would be 21.33, which supported 21.11. And let's just go on and move on now to the dollar yen. So the dollar yen broke below 420 before finding some bids. Resistance on Thursday would be 486 with support at 424. And 486. And Brock says not seeing the proper bias chart screens, but we did get that corrected. Still on NQ and GC screen. One moment. Yeah, it's on the right screens now. And let's go and move on to the dollar index. And as I mentioned, the dollar index is more about what's happening in the euro than the actual dollar. Because if it really responded to equity sell off, we'd be up in the stratosphere. Maybe not in the stratosphere, but we'd be up here around 95. And we're still in the 93.50s. So this is more about the euro selling off than anything else. Because as I said, the euro comprises 56.8% of the cash dollar index. So the dollar index pushed higher, closing on bias chart resistance of 93.43. Resistance on Thursday would be 93.65 with support at 93.03. And no change on the biases on these. The only reason the dollar's high is because the euro's lower. That's all. Looking at the Kiwi yen, yesterday we had it at 69.56. We did take that drop once again because this had more to do with the cash equities falling. So support here, we've already pushed pretty low. I don't know if we can brush much lower because I don't really see the equities coming apart. They already did. They came apart yesterday. But as a risk level, there it is, 69.06. That will be your bias chart support, 69.06. So we're going across it, that. So 69.06. And resistance will be this level, 69.54. Moving on to euro pound. This is just stuck in neutral for now after we tested those stops from before. I think that the sort of resistance is going to be the same again. We had 90.06 and 90.75. Yeah, so no changes, and we're stuck in a tight range. So this will be this third day in a row. Those stay the same. Moving on to the euro odd. And this one had more to do with the Aussie being so big moves in the Aussie. But we snapped back here with the euro and we're kind of dead in the water. I'm actually going to go with resistance being just the close of yesterday. 66.72. And support, keep it simple, 65.81. You can see the significance of that 65.81 here. See that? So 65.81 for support. Then the Euro Kiwi. Same thing, big move from the antipodian currencies, Aussie, Kiwi. We do this bounce back, and resistance is going to be just like the other one, the high. 76.89. Well, not the high, but yesterday's close. Support came back to the 76.37, but I would look for just a tad bit lower right there. There's your risk level, 76.11. On to the Aussie yen. Boy, we really did go and give up the ghost here on that move lower with the weakness in equities. Um, the yen's been firm, so we could probably move a little bit lower. So there's going to be a risk level right there. You can see some nice touches coming across, and that's going to be 73.30. With resistance being right the lower part of these where these wicks are, 74.17. Onto the guppy. And yesterday we had 35.26, you see here, and they took that out, but they recovered above it. The support right now is just going to be this wick here, right there, which is still above here, and that would be 35.03 with resistance right here, the level 35.89. Wrap it up with sterling odd. Nice move here. Obviously, it big has a lot to do with the moves that we're seeing in the Aussie. So we can see this market strengthen a little bit further. I'd go with the high right here, and that would be at 84.48. And support this low right there. I don't think it'll get there, 83.27. I don't think we're going to be worried about that. There is this high, so let's go with that right there, which is, oh, that's not much higher, 83.29. And there we have it. And we already we mentioned about the euro, but once again, since it was on a different screen, 1707 is going to be the bias chart support with 1780. We had 1732 yesterday, so it took it out, but it recovered above that. But there is a risk down to 1707. And then quickly with the cable, I'll leave it at that. So we still took another dip. Yesterday we challenged 29. We didn't get there, but we came close to it. But we popped back to close at 29.80. So resistance on the upside is going to be 30.46 with support at 29.36. And with that, that'll do it. I'll go on and get the bias chart posted. And thanks for joining us here on the European Crossover webinar.